Most investors are still fighting over short-term rentals in Phoenix, but the real money right now, it's in the midterm rentals. Less work, more consistent income, and way less competition. If you want a cash flow strategy that doesn't require 10 turnovers a month, keep watching. Midterm rentals, if you haven't looked into the strategy, now is the time, especially if you've been watching the short-term rental market in Phoenix start to feel a little overcrowded, overpriced, and way harder to cash flow than it was just a few years ago. Look, I love STRs. I help manage them, and I work with clients who buy them, but I'm also honest about what's happening. And in today's market, midterm rentals, or MTRs, are proving to be one of the smartest plays in Phoenix for investors who want passive income without getting buried in constant turnovers and operational chaos. Let's break it down. What exactly is an MTR? A midterm rental is a fully furnished property leased for 30 days or more. Unlike STRs, where you're catering to tourists or weekend travelers, MTRs attract longer stay guests, people who need a comfortable place to live for 1 to 6 months. Think travel nurses, corporate relocations, digital nomads, insurance placements, and even families in between homes. Here's the biggest misconception I see. People think MTRs are just a fallback for when STRs don't perform, but that's the wrong mindset. MTRs are an entirely different strategy with their own strengths. In fact, I know investors in Phoenix right now who have shifted their entire portfolio to MTRs because it's more consistent, less demanding, and in many cases, more profitable. Let's start with the guest profile because that is where the shift begins. Midterm guests aren't booking for a place to crash after a bachelorette party in Scottsdale. They're not here for spring training or to escape a Minnesota winter for 3 days. These are people who are living in your home temporarily. They want a quiet, clean, furnished space where they can cook meals, get good sleep, do laundry, and have reliable Wi-Fi. They often arrive with a suitcase and maybe a laptop, not a family of 5 with 3 bags of groceries and a week's worth of plans. They're respectful. They're often work full-time hours. They're not looking to party, and they tend to treat your property kind of like it's their own. Here's some examples I'd like to give you. A travel nurse assigned to Banner Desert for 12 weeks. A family whose house flooded in Chandler and needs a place for 90 days while insurance sorts it out. A newly relocated Amazon manager in Tempe waiting to close on a home. An engineer working on a contract in Queen Creek needing a furnished space close to the job site. A grad student doing a short-term clinical rotation in Mesa. There's strong year-round demand for this type of rental in Phoenix, especially in medical and tech corridors. Areas like Tempe, Chandler, Central Phoenix, North Scottsdale, and even parts of Gilbert are in constant need of furnished housing for exactly these kinds of guests. Now, let's compare the MTR model to the STR model side by side. Turnover. Short-term rentals can easily see 8 to 10 guest turnovers per month. That means multiple cleans, back-to-back messages, and a high level of coordination. Midterm rentals, you might only turn the property 4 to 6 times per year. That's fewer cleans, fewer supply runs, less wear and tear on the property, and a lot more time back in your day. Or less hours paid to a cleaner or co-host like myself, because you're still gonna have to manage this property, whether you do it yourself or you hire somebody to do it. And just like STRs, if you don't want another job, you should look at hiring a property manager or co-host like myself. Income. Sure, a high-performing STR might gross more in the right season, but net profits tell the real story. MTRs often offer 80 to 90% of the gross income of an STR, but at a fraction of the operational costs. Let's say an STR grosses $5,000 a month, but after cleaning, management, platform fees, repair, and dynamic pricing variability, you're netting about $2,500 to $3,000. Now, let's say your MTR rents for $3,600 a month. Your cleanings are every 2 to 3 months, your calendar is full without daily micromanagement, and you're keeping $3,000 or more in your pocket. It's simple, more predictable, and frankly, easier to scale. Let's talk legal risks. In Arizona, midterm rentals 30 days or longer are classified under landlord-tenant law. That means you need a lease agreement and a basic understanding of landlord responsibilities. It's not the Wild West like STRs. You do need to be more structured. Proper screening, a simple lease, and ideally a deposit. But for most investors, this actually brings peace of mind. You know who your guest is, you're not worried about a party, and if something goes wrong, you have legal recourse and a contract coverage. Now let's talk guest experience. Midterm guests tend to have more realistic expectations. They're not reviewing your place because the pool wasn't heated to 84 degrees or the wine glasses didn't match. They're looking for comfort, cleanliness, reliability, not necessarily luxury. This lowers stress, review pressure, and turnover damage significantly. Now let's talk about where MTRs work best in Phoenix. Some of the highest demand zones I've seen for midterm rentals are around major hospitals like Banner University, Banner Desert, Mayo Clinic, Dignity Health, and Phoenix Children's. In tech and employment corridors like Intel, State Farm, Honeywell, Wells Fargo, and ASU, near redevelopment areas like Downtown Mesa, Roosevelt Row, and Tempe Town Lake. East Valley suburbs like Gilbert and Chandler for families in transition. Central Phoenix and Uptown for digital nomads and creatives who want a local, livable neighborhood. If your property is within a 15 to 20 minute drive of a hospital or major employer hub, you have a real shot at consistent MTR bookings. Now, let's talk about what makes a good MTR property. You don't necessarily need a pool. You don't need fancy wallpaper. You need comfort, function, and flow. A 2-bed, 2-bath is ideal. 3 beds work too, but studios and 1 beds can limit your audience. You need reliable, fast Wi-Fi, think streaming and Zoom calls. In-unit laundry is a must. People are living here, not vacationing. A fully stocked kitchen, pots, pans, coffee maker, microwave, etc. Comfortable furniture, clean linens, and ideally a desk or workspace. Parking, a covered or garage is a plus, and ideally you're not directly on a super busy road or in a rundown complex. Now let's talk about how to market and fill your MTR in Phoenix. You can absolutely use Airbnb for midterm bookings, especially if you set a 30-day minimum stay. But I'd also suggest expanding to Furnish Finder, the #1 site for travel nurse housing, Facebook groups for travel nurses, corporate housing, and temporary relocation in Phoenix, local HR contacts, and insurance housing placement coordinators, your own landing page or direct booking site if you want to build brand recognition and repeat guests. And just if that all sounds like a job to you, which it can be, you want to hire somebody like me, a realtor who can write your leases, as a property manager who can manage these properties for you, so it takes the work and the headache off your plate. If you choose not to use somebody like me, then I would suggest you build relationships with placement sources. If an adjuster places one family with you and it goes well, they will come back. Same goes for nurse staffing agencies or relocation companies. Reliability wins, and word of mouth can fill your calendar for months. Let's touch on pricing. In 2025, most 2-bedroom MTRs in Phoenix rent for between $300 and $4,500 per month, depending on location, size, and finish quality. Luxury properties or 3+ bedrooms can push higher. Smaller units or those further out may land closer to $2,500 to $3,200. When you run your numbers, don't just look at gross revenue. Look at your cost of turnover, vacancy, time investment, and guest messaging. For many investors, MTRs offer better returns when all these operation variables are factored in. And remember, MTR isn't seasonal. You don't need a spring training calendar. You don't need to chase weekend events. The demand is consistent year-round, especially in a city like Phoenix that has a strong medical workforce and a lot of people in housing transition. So what's the downside? You will need to furnish the home, ideally higher quality than the bare minimum. You may need to include utilities. You need to vet your guest and have a lease and manage basic landlord duties. It's not set it and forget it, but it's also not a daily grind like STRs. And if you're working with a manager who understands MTRs, or you're ready to self-manage with a plan, it's incredibly doable. So is MTR the smarter formula for passive income in Phoenix right now? If you're tired of racing for reviews, managing 10 turnovers a month, or being priced out of STR pockets, then yes, it's a cleaner path to consistent income, lower stress, and more freedom. If you want help figuring out whether MTR is right for your property or next purchase, send me a DM that says MTR Strategy, or click the link below to grab a time on my calendar, or shoot me a text message. I'll walk you through what's working, where I'm seeing the most demand, and how to structure a midterm rental for long-term success. And in the next video, I'll take you behind the scenes on exactly how to analyze an MTR deal, including how to estimate income, screen demand, and decide if a property is worth the investment. See you there.